Hello, this is Brian Shannon from AlphaTrends.net. Today is Friday, the 17th of April, 2009, and the market finished with a gain here. The NASDAQ finished up 7 cents or 0.2% as the short sellers continue to be tormented here in this uptrend above the rising 10, 20, 50-day moving average, above the 5-day moving average, of course, as well, which in the shorter term time frame I think is even more important. But we have a very clear pattern in here of these higher highs and higher lows, and the market continues to chug higher. The volume was a little bit lighter today, but again, the only thing that does pay is price. There's a lot of reasons, as I've been mentioning, to be very cautious in here. One, the magnitude of this rally has been so large without a meaningful pullback that it seems as though one should be coming. Perhaps we'll see another test of this 3170 level. That's where this prior resistance was, and that's now where we ought to meet a rising 20-day moving average as well for this market. If we look at the if we look at the average price since this market, let's add one more day to that. Since this market began this rally, and now I have to it's going to change my scaling. I'll have to do that twice. Sorry about that. But the average price since this market began the rally is about $30.62, and that's about $1 below this prior resistance level. So there's again a lot of these speculative stocks continue to really rally. I pointed this one out on Twitter and said at $1.73 and said, should I buy another penny stock or should I ignore it? Well, unfortunately, I ignored the Pacific Sunwear today, but there were a lot of other good winners that I did talk about as well. And by the way, my blog is going to be changing drastically here early next week, as I am going to start a subscription product in partnership with StockTwits. I will have more details about that over the weekend. So there will still be some free content, but it's going to be drastically cut back, including the end of the day video. So if you're one of the people who've been viewing it for the last couple of years, I appreciate your support, and hopefully you'll find the subscription product worth your time as well. The as far as today goes, the market was above its daily VWAP for most of the day, and we did have a very strong advanced decline line as well. Let me just pull that chart over here. You can see that here's how that looked. Early on, it looked, basically the advanced decline got about even right in here, and then the buyers took control once again. Saw a little bit of a sell-off here late in the day. The Nasdaq didn't sell off quite as hard as some of the other markets, but still, it's very impressive, this strength. I think that you have to be on high alert for next week as far as the greater likelihood of a potential pullback. This is going to be our first important potential support area, just under $32 a share. It was this resistance. It was tested this morning. The market bounced from there, so that's our first level. And below that, let's just change that back again. So that 33 is the first important level. Then we've got this area in here, but time to really be on the defensive. It continues to be time to be on the defensive in here. The financials were up 14 cents today. They did briefly break out to new highs of this move here, but you can see that it was unable to follow through on that, and we're still stuck below these levels from December. So this market again has had a massive percentage rally. It's still in an uptrend. There's no reason to be an aggressive short seller in here, but the more extended it becomes, the greater your defense mechanism ought to be, not the opposite way. For most people, their confidence grows in the direct proportion to the price, but what you want to do is actually raise your caution as the market gets more extended. Obviously, 975 is a very important level. We've got the VWAP since this move down here at about 916, and the $10 is also a very important area. A little bit shorter term, I think we can look at the pullback low from this morning at about 1072, and then of course that $10 level. The IYR, this group again, this is one where it's easy to make a bearish case fundamentally, but this week, this IYR had a real big week, 3 big weeks in a row, and it's getting extended, and we're seeing these long tails, and those long tails simply indicate that it had been higher during the day but closed, closing with some weakness. They say the pros act on the close. So just something to be aware of, not a reason to be short aggressively. Here's an important short-term support level for this market at about 31 and a quarter or so, and then we've got that 5-day moving average just below that. The Russell 2000 finished with a 42-cent gain today. This market again flirting with these levels from mid to late January. It gotten above them intraday and actually closed above them as well. I hadn't realized that, but it's another market that's very extended here to the upside. The rubber band is stretched. Doesn't mean it can't continue higher. It just means raise your guard, because in the short term or short to intermediate term, we've still got uptrend lines intact. We've got rising 5-day moving average. We've got the average price of this rally down near 42 and a half. This 47 area will be the first important area of potential support on any pullback, and just got to be very careful. Again, we're also in earnings season, so a lot of stocks are going to be trading based around that, and it raises the risk for a lot of stocks, in particular if you're holding overnight. S&P 500 finally, let's take a look at that, was up 58 cents or 0.67%. This market, unlike the Russell, was not able to breach the late January highs. It came up and basically touched that dead on intraday and then backed off a little bit. Nothing here to be concerned about yet. We still, in all these markets, have these nice patterns of higher highs and higher lows in here. Now, for the real health of the market, it needs to hold above this area here at about 83 and a half. So let's say right in here, basically. That's the most pertinent higher low. Basically, at this point, we have these higher highs. Here's the most important higher low. Before we get to that, though, this little level of resistance that did act as support early on today at about 86 and a quarter will be something to focus on early next week. I will have a live event. This is going to be the final free live event this Sunday evening at 8 p.m. Eastern. And if you're viewing this on my blog, you see the link either probably just above this video. If you're viewing on YouTube, alphatrends.net. Thanks.